Hi, I'm James Daniel, and we are back with a brand new episode of Personal Finance FYI. Yes, we've been on hiatus for a little while, but we're going to be back with regular episodes going forward. And today we have a topic that could mean a tax refund for you. So you ready to get started? Personal Finance FYI starts now. And welcome back to Personal Finance FYI, the web program designed to help you make smart financial decisions and grow your wealth. So have you ever worked for an employer that gave you stock grants, stock options, or restricted stock as part of your compensation? If you haven't, then continue watching, because if you know someone that does, this information may make you their hero by potentially putting money back in their pocket. So here's the situation in a nutshell. If you have received stock options, stock grants, or restricted stock, items we call equity compensation, from your employer, and you sold once those vested, you may have paid double income tax on it. How, you ask? Well, here's the scenario. When your equity compensation vests, meaning your employer allows you to sell it unrestricted, it is reported on your W-2 tax form as other income. When that equity compensation then shows up in your investment account and you sell it there, you also get a 1099 tax form from that custodian. However, the custodian that holds your options or grants may not have known what you paid for it or your actual cost basis, so they default to zero. This means you get a 1099 tax form from the custodian showing a taxable gain that is identical to the number in box 14 of your W-2. So being unaware, you report the 1099 transaction on your taxes as a short-term capital gain stock sale, showing the entire proceeds as a gain, but you already reported that gain as part of your W-2 from your employer. Do you see the problem? That same income is being taxed twice. I've personally seen this issue with clients using name brand DIY tax software, especially when they import the stock transaction data. I've even seen it from tax preparers that just completely miss it. What you should do is either get the correct basis or indicate on your tax form that this income on the 1099 was already included elsewhere in your tax return. Otherwise, you pay tax twice on the same equity compensation income. So, how do you know if you or a friend is affected? Simply look at the 1099 and see what it reported as your cost basis on the company stock that you sold or on Form 8949 on your tax return. If it says zero, then quickly review the W-2 from your employer and see if that stock transaction was reported as other income in box 14. If you think you have an error and pay double tax, then you would file an amended return to get a refund. You might even want to review past year's tax returns to see if you are owed a refund for multiple years. If you're completely confused by what I've just shared with you and you had equity compensation last year that you sold, then have a tax pro do a quick review or contact me and I'll review for you. Until next time, I'm James Daniel, and I will see you on the next Personal Finance FYI.